into halal investing, where faith meets finance. We're on a mission to halalify investment world, one stock at a time, inshallah. Let's explore the market with through a halal lens, uncovering opportunities that align with our faith and future. Alhamdulillah, and we're happy to see you again. Another episode of Market Talk with Musaffa. We know that we're at the month of Ramadan. Everyone is fasting. Such a beautiful month, and we always happy to see our audience to join us and talk to us about this very hot topics on the market, right? But before I proceed with our topic today, we also want to acknowledge that the recent escalation conflict in the Middle East, and our thoughts and prayers are with those affected. We pray that tensions ease quickly and then peace and stability are restored. Inshallah, may Allah protect all those people affected in those countries, keep them and their families safe, and grant them strength during this difficult time. Inshallah, wanted to mention this before we proceed, because we seeing things on the news. Inshallah. So today's topic is tariffs return, because tariffs are returned, right? What the Supreme Court ruling and new 15% less duties mean for market and investors. So that is going to be our main topic today. I believe it's important for people to know, because these quick shifts in the tariffs are affecting market a lot lately, especially during this administration with Donald Trump. So it's important for the investors to be aware of this changes and then how to act. And trade policies are usually not just a political headline, right? It directly affects so many things in our lives: the supply chain, corporate margins, consumer prices, our daily life, and ultimately the portfolio performances, our portfolio performances, or the big companies' portfolios performances, right? So to help us unpack all of this economic mechanism, market implications, all of this interesting stuff, we're pleased to be joined by Professor Musaffa. Together, we're going to explore and discuss what shift means for market, and how investors, including Sharia-conscious investors, should think about navigating during this time. So okay, before I give the disclaimer, which is very important for me as a lawyer, I would like to give a few words for Brother Muiz.
Assalamu alaikum, Rina. Thank you for having me. I'm happy to join Musaffa this time in a different talk, and to hopefully share, some views, some facts about tariffs and how they'll be impacting the markets, portfolios, as you said, a lot of different mechanisms that are under the hood that we need to unpack when it comes to tariffs.
Absolutely. I'll make a small disclaimer, and then we proceed to our interesting discussion, inshallah. So Musaffa LLC is a U.S. SEC registered investment advisor, but this registration doesn't imply SEC endorsement. These live sessions and episodes are for educational and informational purposes only. Nothing discussed today should be taken as investment advice. The discussions on this live sessions are not tailored for your financial situations or risk tolerance or investment objectives. The views and opinions expressed here on our webinars are our own. It may not be representative of our experiences of other people. And then please remember, all investments involve risks, including the possible loss of your entire investments, and past performance is not guarantee of the future outcome. So this is one of the important things, because we become a regulated entity, and we have to make those disclaimers at the beginning. And we'll proceed to very interesting discussions. But I usually ask our audience, because we have a very engaging audience who come and then leave questions and comments, etc. Please add your comments or questions at the any channel that you're coming in. We are live on 5 channels. It's on LinkedIn, YouTube, Instagram, and so many others. So please leave your questions or comments, and we will be happy to bring them up. And I would ask you to let us know where you're joining in with your first comment. It would be very nice to see where people are joining in and listening us. So, Brother Maurice, if you don't mind, we start the discussions.
Hmm.
And then to set the context, I want to say, can you briefly explain what the Supreme Court ruling changed and how it led to this new 15% global tariff announcement?
Yeah, so the Supreme Court decision that many people read about was really about striking down certain tariffs, not all of them, making them de facto illegal. So the Supreme Court said that uh, this goes back to an act in, I believe, 1977. So, more than 50 or, 50 years ago or so. Uh, and the language in that act, there are two key words that are mentioned. One is regulate, and then importation, I believe. And the
Mm-hmm.
court decided that these two terms are not enough to give the president the power to legislate tariffs, specifically because this is a tax. It's considered to be a
Mm-hmm.
tax, and the authority and power to levy taxes sits with the Congress in the United States. So
Yeah.
that was the sort of core of the decision to strike down the tariffs as illegal. But again, I want to underline it's not all of the tariffs. It's certain tariffs that came as a result, or where justification was this. I believe, if I remember the name, International Emergency Economic Powers Act. That's the full
Mm-hmm.
name, which again sort of claims national emergency as the reason behind the tariffs. And the court said, no, this is not a good enough justification. You cannot use this particular act for those tariffs. But at the same time, we have other tariffs, which are part of other acts, different trade acts, and Trade Expansion Act, which still remain. Nothing is changed there at this very moment by this court decision. Whether those things will change in the future or not, we'll see. But the 15% tariffs that the president enacted immediately after are temporary in nature. So they have up to 150 days to keep these tariffs. So they're very
Mm-hmm.
temporary compared to everything else. But the administration has a policy direction. So they're looking in different ways to make these tariffs, these or similar ones, permanent. So they're
Permanent.
looking for ways to do that. But the ones that came immediately after the court decision can be valid for up to 150 days.
Okay, understood. Thank you so much for laying out that because for people it might be confusing how and in different governments and jurisdictions across the globe these policies are regulated differently. So
Mhm.
it might be very informative for them to understand how
Mhm.
this happened, right? So thank you so much for going into detail in that. And then so, from an economic standpoint, why are tariffs such a significant policy tool? What do you think?
So again, remember tariffs are a tax, right? So any tax will be important for a number of stakeholders in the economy domestically and obviously abroad because tariffs are such a tool that govern in certain ways relationship between two countries or domestic countries with other countries. But economically, it's because of many implications, many direct and indirect effects that tariffs will have. First of all, it's the obvious one that we are all feeling is the increase in prices. As
Yeah.
soon as you levy tariffs, you have an increase in prices of certain goods. In this case, these tariffs have been sort of widespread across variety of goods. So you get to feel it in many different areas. Second, outside of this direct price increase, you have indirect price increases. So, for example, if a certain company is importing toys from China, that's a direct price increase because of 15 or whatever percentage tariff. But
Mhm.
the indirect costs are producers who make goods in United States but import certain raw materials, certain sort
Mhm.
of goods that they use to create that product that will indirectly lead to increase in prices. And the well, not the last one, but potentially very important one is retaliation. As soon as you introduce tariffs, you'll
Mm,
have retaliation on your own exports, and I think the U.S. farmers are seeing that firsthand.
yeah.
The impact is very negative, and the prime example is soybean farmers who were hit by retaliation from China as a result of U.S. tariffs. So these are sort of three big impacts, but then you have second order impacts on portfolios, on investment decision by companies,
Yeah.
understanding how long this uncertainty will take place, which ultimately can cause economic slowdown just because of the sheer uncertainty of what's happening right now.
Great. Thank you. Thank you for that depth. And then, as a follow up to that, anyone, it could be interesting
Hmm.
to know. So, this shift that you explained, which is negative in
Hmm.
many aspects in our lives, should this investors interpret it as a short term sort of like political development, or is that going to be some signal to the broad? So, if the administration was even struck by the court, they came back again, and they're still looking for finding a solution to keep this tariffs. So is it going to be like a long term so the people have to adjust it that way?
I believe so. I mean, when you look, just the example you mentioned, the very day, the court decision came back, you have new different tariffs and a promise to look into making these permanent. So I believe it's not a short-term political game, even though it looks like it. It looks very much ad hoc. All of these decisions
Mm-hmm.
by the president, by the White House, when it comes to tariffs, are very sudden, very broad, and the markets don't understand them, at least at first. I believe, therefore, it's a structural shift. The White House has clearly said this is our direction in terms of this policy, and we'll do whatever it takes to make it happen. So I think it's here to stay long term, at least for the next few years, until there is new administration that might think otherwise. So for next 3 4 years at least, you'll have this. But more so than that, it's not just United States, it's also other countries. The globe is pretty much becoming more protectionist of national
Mm-hmm.
economies by tariffs, counter tariffs, subsidies in different ways, where they try to protect their own domestic production, or in fact just retaliating to tariffs imposed in this case by United States. So I think this is a structural long-term shift, and investors and consumers need to understand that the effect of this is probably going to stay for long term.
Yeah, and then bake it in their investment planning and etc. Right?
Correct.
Okay, great. Thank you. Thank you for explaining that. And then as just follow up, because it would be interesting because some people only consider some sectors or some areas for investments,
Mhm.
right? So, which sectors or industries are you think the most sensitive to tariff increases, and why?
So again, tariff being the tax on imports,
Hmm.
the industries where most imports happen are most likely to be hit. So when you think about our daily lives, the things that we buy. I have 2 kids. Whenever you go out to buy them toys, it's almost guaranteed it's going to be made in China. And usually the places that sell those toys are bigger retailers. So margins are going to be low in that line of business. I mean, pick whatever dollar store, right? The classic
Hmm.
one, very thin margins.
Yeah.
Whenever tariffs increase, places like that, businesses like that are going to be hit very first, and then their margin compress even more. And they don't
Mm,
have a choice. They don't have pricing power to change that. So in general, wherever a lot of imports of goods happen, and this
mm,
happens in, again, I gave an example of toys, but really it's electronics,
mm.
technological hardware, retail apparel. Take Costco. Costco was one of the companies that sued for tariff refunds.
Yeah.
Costco is in that situation, maybe slightly better margins, but then really that kind of business operates on low margins. So anybody who imports, who
Hmm.
depends on imports, who's just technically a merchant, a reseller of imported goods.
Hmm.
Businesses that depend on imported raw materials to produce their goods, they're also can be, they're slightly less sensitive. But then again, their businesses will be impacted. Their margins will also compress. Um, and as part of the retaliation, again, we have
Hmm.
to look at that angle. Farmers and any businesses who will be hit by retaliation from other countries will not be spared, even though they're not technically importing anything.
Yeah.
They will not, they will bear sometimes, big brunt of this retaliatory war, as again, as I mentioned, U.S. farmers are seeing. So anybody who's not sensitive, like thinking of the opposite, who are the resilient sectors, it's again, as common sense would tell, well, anybody who's doing business within US who don't
Hmm.
have to import, where most revenue just comes from the domestic market. And you can think of utilities,
Hmm.
telecom, you can think of services, software, healthcare, financial services, even. Consulting, anything where the service is the main provider, and especially if they're primarily a domestic company, they won't be hit by tariffs directly. Obviously, indirectly, we're all hit. We're all seeing slightly
Yeah.
higher prices everywhere. But as a business, they can easily deal with that,
Mm.
and they won't be hit in any significant way. And finally, even businesses who are hit but have high pricing power, so they have a strong brand.
Mm.
They work in an industry where demand is not so much sensitive to price changes.
Yeah.
They will have a much stronger ability to sort of weather these tariffs and survive, lose some profits probably, but still come out on the other end really unscathed.
So you're talking about some luxury exclusive brands,
Luxury
right?
brands, would be sort of a main example. Even other brands where maybe they're not considered luxury, but they have a lot of pricing power, maybe because of supply chains, for
Mm.
many reasons.
Yeah.
But if they have the ability to pass on that cost to their consumers, they
Mm.
won't be hit as a company. But again, the consumer in most cases will be the group that suffers either way.
Yeah, exactly. That leads me to next question, which is if we look at from the practicality to our lives, even not only much of the investment perspective, because we need to also to consider that aspect, because we cannot save a little bit extra to invest, right? Then, so who ultimately absorbs the cost? Is it companies, consumers, or both, or how is the government somehow absorbing it?
So when you look at what the White House says or implies, it's that the tariffs are a punishment to other countries who are exporting into the U.S. But the facts show otherwise, and common sense understands that tariffs are really a tax for the domestic market. You might have cases where the exporter will lower their prices somewhat to sort of show goodwill, but they will not absorb the entire tariffs almost ever. And academic studies of the 2018-19 tariffs
Hmm.
imposed on China show that most of this will be on domestic companies and consumers to the tune, don't quote me on this, but the number is really high. I believe 96% or so, some estimates say, is on the domestic
Wow.
markets, and that includes obviously businesses and consumers. But then we have to look at the time dimension. When tariffs are imposed, initially it's the businesses that will have to
Mm,
pay, right? When they
mm, mm,
import the goods, they pay the customs, so they have to pay the tariffs themselves. So there's a bit of a lag before it hit consumers. It doesn't happen
mm,
immediately, but ultimately, this price increase will flow down to consumers to some extent, sometimes all of it. Again, that's where that pricing power plays a role. Uh, but either way, consumers expect to bear the biggest brunt of it, and corporations share, at least initially, some aspect of that. So, and when you think of this, it's then, what types of goods are being hit the most,
mm,
from consumer electronics to retail to apparel. Ultimately, the highest impact will be on low income households, where they spend more of their income, discretionary income, on imported goods. So in relative sense, they're hit the worst in all of this.
Yeah. So, and then you explained this track, how it's going to happen. Like initially, it's companies, and then it will reach the consumers. So, and that does that mean the inflation is going to catch up us later? Sort of that, because when it reaches consumers, then they start feeling it, right? And then there's all of this, the price increases, and inflation starts kicking in. Or the inflation may also get effect, like a increase from, like in short term as well.
So yeah, when you look at inflation again, initially, just think of Liberation Day and what happened, last year. We didn't see an immediate increase in prices. And again, one thing is just the uncertainty of how serious these tariffs are. Will there be changes 1 week from now? But once the actual imports start and businesses start paying tariffs, then it's a matter of time. It depends on what the good is, how strong the business is
Mm-hmm.
financially, to sort of provide that buffer, that lag before it reaches
Mm-hmm.
consumers. But then it's anywhere between a few months to a year where that price increase will ultimately be shown on the shelves, and we have to pay it. So that's the short term inflation, price increase that we have already experienced. A bigger issue in economics is, what do you expect next year, 2 years from now, 5 years from now? The expected inflation, or just the expected certainty slash uncertainty when it comes to
Mm-hmm.
tariffs. That's the bigger problem, especially for businesses, because they have to make investment decisions now, thinking what might happen in the future. And
Exactly.
similarly, consumers, we if we think that things will get worse now, I mean, in the future relative to now, then you're looking to save some money now to weather the storm that you're expecting.
Mm-hmm.
So ultimately, if people expect higher inflation in the future due to tariffs, that will compress, that will reduce economic activity overall, spending, investment. And
Mm-hmm.
that's really the worst effect of all of this. It's not the
Yeah.
short-term inflation, it's what happens in expectation and how that affects our decisions now, from spending, from business investments to our
Yeah.
portfolio adjustments as sort of retail or institutional investors for that matter.
Yeah, that's what I thought too. So that's going to all bring to this slow economic growth effect, eventually, because and then people's, planning and projection, and then anticipation of this all may affect this. Okay, so this is very, very good. Thank you for going into detailed discussions here.
Sure.
And we have our audience, giving a good comments, leaving their emojis. So if anyone joined a little bit later, please again, leave in comments where you're joining in. And if you have any questions, we're always happy to bring it up, and then discuss it, and then share our thoughts on that point, inshallah. So how might, another question is, how might like major trading partners respond to these new tariffs? So you talked about these retaliatory measures, or more protectionism kicking in. What do you think, the like major ones, let's say China, or like European, or some other, even like Canada, where I am located right now, if it's affected, how those, you think, going to respond?
So when you look at, let's say the big players, EU, India, and China, perhaps, uh, they will respond in ways. I think everybody's being a bit diplomatic and strategic at first, like
Yeah.
waiting to see how serious things are coming out of the White House. But ultimately, they will protect their own domestic economies. And this, in fact, is not a new thing. This has been happening, this trend towards protectionism since, I would say, 2016 or so. When you look at EU, it doesn't have to work as tariffs. Now we have counter tariffs. But when you look at different subsidies for different industries by, specific countries, when you look at, India and China, they had their own sort of campaigns where it's, we want to see made in China more, we want to see made in India more in the
Yeah.
domestic markets. And in China, it's not just the goods which are sort of low cost, but high tech products as well. And
Hmm.
we're seeing that China is has made tremendous progress on that front. India is behaving the same way, so they have different sort of import levies, duties, ways to protect their own domestic economies. Sometimes a bit at a detriment. For example, to give India solar panels, like production of solar
Hmm.
panels. They really wanted to keep their own domestic production thriving and growing and developing.
Hmm.
That even though they were twice as expensive as the Chinese counterpart, they did not. They disallowed importing through very high, tariffs, very high import
Hmm.
levies. When you look at European Union, they do it more through regulation in different ways. But one example
Hmm.
is digital services tax, where they hit, which is essentially a tariff of sorts on particularly U.S. big tech companies, Apple, Meta, Google, I mean Alphabet, and so on.
Yeah.
So they are all doing it and have been doing it, for the last 10 years or so. And with the escalation rising, I think it only can get a worse, in the sense more retaliation, more actual tariffs will come from other countries, especially these big markets. And there's one other thing I just want to mention that's really important. The World Trade Organization is not really functioning well anymore. The process of appealing
Yes.
something in international trade that a country finds unfair, that process has been stalled. It's not really working. Any appeal that you send, even if it's correct, right, it sort of falls into the void. And that's because of the us, since the last previous Trump administration, has
Hmm.
really done that, where now we don't have a working appeal process with the
Yeah.
WTO. So really any country can technically do whatever they want, even though it would be considered quote unquote illegal, based on the World Trade Organization agreed procedures and standards.
Yeah, since it was one of the my favorite topics when I studied in Norway in law school, I loved all these the how the system was built and how it was properly functioning. But
Mhm.
when they killed this appeal system, I was like, I guess the WTO exists with its rules, but no teeth, right? So no, no regulatory like
There's no
enforcement is going to work.
resolution. Yeah, I can
Yeah,
send appeal, and many countries have done it. Russia has done it, Turkey has done it, US
yeah,
has done it, China has done it. And then everybody knows there will be no outcome, no resolution.
yeah.
So you continue with, quote unquote, illegal activities based on
Yes.
that international trade system.
Absolutely. Okay, so it was very, very interesting discussions in terms of the tariffs and how economic impact. I want to bring you to our community's more interested discussion, which is about the Sharia compliance lens.
Hmm.
I have two interesting questions, and I guess we can close to wrapping up our discussions, which has
Hmm.
been very interesting. So, for Muslim investors who are building Sharia compliant portfolios, does the tariff heavy environment change how they should think about diversification and then set like their exposure and the risk management, etc., in this environment?
Absolutely. I mean, every single investor is impacted to some extent. So, including Sharia compliant investors. Uh, Now, it depends on the perspective. If you're, say, strictly a US investor that invests in US Sharia compliant equities, versus if you're more global investor that invests in, equities in US, other countries, in sukuk, in real estate, things slightly change. But everybody's impacted. So even Sharia compliant investors sort of need to think, what should I do? What's the prudent thing to do in this case? There is a bit of natural protection for Sharia compliant investing, in the sense that um, Sharia portfolios are low leverage, right? In
Mhm.
essence, they avoid highly indebted companies, using the IOFI or other standards. So there's natural protection for companies that have, they have more of a leeway to protect their margins, whatever industry they're in. So that's a
Yeah.
natural protection. And at the same time, you have a bit of a risk, because usually Sharia compliant portfolios, ETFs, mutual funds are very tech heavy,
Okay.
and the tech is obviously impacted significantly here, especially when it comes to the hardware part of that,
Mm.
where a lot of that production happens in China. So, the supply chains are hit tremendously when it comes to that sector. So that's the immediate risk, the highest risk, I would say, when it comes to Sharia compliant investors. Um, and then geographically, some investors might be, US concentrated,
Mhm.
whereas some might be diversified. So there are certain ways that Sharia compliant investors, should approach this in a smart way. And, one thing is sort of that broader thing. You have to diversify. You have to think in terms of sectors, diversify across sectors. And in this case, what it means is diversify away from the tech sector into other sectors which are more resilient. And
Mhm.
examples would be healthcare uh, or financial services. But we know, especially for the U.S. investor, financial services are
Yeah.
a no go. So really, healthcare, consulting, software. Uh, are the things where investors can shift from tech into those areas. Obviously, AI is also affecting software, so but
Yeah.
that's a separate discussion. Um, More globally, investors, Sharia compliant investors in the US to an extent, but really otherwise, or investors who just invest globally, should think about real estate linked, whether it's companies, equity,
Mhm.
whether it's REITs, real estate investment
Mhm.
trusts. Those provide more natural protection against inflation, which is sort of the expected impact of tariffs.
Yeah.
Sukuks are asset backed, are asset linked. So that also provides a natural hedge against inflation. So regardless of what happens with tariffs, so
Mhm.
sukuks are always a good way to invest. They're obviously safer in general sense than equities, but they also, in this particular case, provide an extra layer of protection, which otherwise wouldn't be there. And I would say, and everybody's more or less aware of this, gold also acts as a pretty standard, well-known inflation protection, haven against inflation and uncertainty in general. So, what I would say, movement toward real assets, whatever the form, actual real estate or real
Mhm.
estate funds or sukuk that's linked to real estate, gold, certain commodities which are impacted, in good ways. And if you are strictly, say, U.S. investor, then you want to think about, investing more in steel industry, which actually
Mhm.
benefits from the tariffs,
Mhm.
healthcare, software and other consulting, services such as consulting and whatnot, which obviously are very little impacted by tariffs, if at all.
Great, great. Thank you so much. Yeah, I learned a lot because of this discussion. Even when you engage your with the knowledge background, it's very helpful. I believe I will be sitting and reviewing my thoughts also how I would invest.
Mhm.
That could be really interesting discussions in one of our next interviews. These episodes, but thank you so much. And I believe, and my thought process is, and just to give, and again, we
Mhm.
want to disclaim to everyone, this is our own thoughts. It's not your recommendation to for you to go and engage in and buy the stocks or equities or commodities that we shared here. But I believe commodities, especially gold and silver, are going to stay strong because
Mhm.
if this game of tariffs are going to continue, and this is my personal thoughts again. And then one of the you said the tech companies, yeah, heavy or like hardware tech is impacted, but software tech is not impacted though. So it could be a really good shift for people to understand if the company is engaging in software business. That could be really good analysis for them, for people. And I would ask the very last question. It was very interesting discussion with you, Brother Maurice. So, if you had to leave a Muslim investor with one key principle for navigating the trade policy
Mhm.
uncertainties while remaining disciplined and Sharia aligned, what would that be?
So, these would be classic advice for all investors to an extent. And then you have sort of, something specific for Sharia compliant investors. First of all, any investor should try to separate noise from the actual signal. In other words,
Mm.
don't even attempt to invest on headlines, right? Tariffs
Yeah.
did this, tariffs did that, White House did that. That all is noise. And some of that is signal that we should read, but our approach should always be long-term investing. You have to
Mm.
think about the stuff, equity, sukuk, whatever it is, commodities that I'm investing in. Where do I see this in 5, 10 year horizon?
Yeah.
Am I optimistic, positive, based on my research and analysis? You have to do that. Like, you have to tie your camel, do the research and analysis, and
Mhm.
then based on your output, you have to form that conviction, right? Regardless of the noise that's happening in the market, you got to stick with your conviction and just wait. Anybody, to give an example, who sold their shares in 2018, that initial wave of tariffs, lost when the immediate sort of, well, not immediate, but 2019, the recovery was great. They
Yeah.
lost potentially on that recovery. And we saw in general, tariff news comes, stock, market goes down. Within days, once uncertainty is resolved a bit, it goes back up. So think long term, forget this, and act with conviction. Do the analysis, and obviously certain things need to be adjusted. But managing risks when it comes to tariffs, that certain sectors are affected, certain sectors are not. Check your portfolio. Are you heavy on the impacted sectors? Do some sector rotation. Put more money into more consumer discretionary, telecom, utility, sort of domestic industries, which are fairly resilient, strong, and large, and move away from tech and import heavy industries. Consider more commodities, gold and silver, like you said. And if you are somebody who's investing in emerging markets, then you have to be careful. Analyze that emerging market. Are those countries significantly impacted by changes in the value of dollar relative to their currencies? Does that impact capital flows in and out of the country? Stuff like that. You got to see if there's any embedded risk that might be, multiplied by tariffs. So you got to geographically diversify your portfolio as well, if that's the case. But ultimately, do your research, act with conviction, and wait. And then, from our perspective as Muslims, right, you tie your camel, and then it's tawakkul. Like, you just have to leave it, to
Inshallah.
Allah. You've done your job, you've done your best. Whatever happens will happen. You cannot control it. So control things you can: asset allocation, risk management, diversification. Get rid of the emotional acting and changing your portfolio when headlines happen. And long term, you will be successful as an investor.
Inshallah. Yeah, and then if I summarize this for a listener, so you basically remove the noise, stay towards your conviction, and
Mhm.
stay disciplined, and then always do your research, right? And then stick to that research, that your conviction you decided. It's you see, it's the very good sort of like a cheat sheet for the people who wants to stay disciplined. Very, very informative. Thank you so much, Brother Maurice, our assistant professor of finance from Lake Forest College. Brother Maurice has been on our webinars. He is sharing with our community. He wants our community to be successful. That's why he comes to our live webinars and these episodes. Thank you so much for being helpful. I believe community learns a lot from these that we are organizing, and we will be always looking forward to bring you in again on very interesting topics, inshallah. Maybe you share some topics that you usually cover in your finance research.
Mhm.
Maybe we can bring you when those topics become hot topics, inshallah. It was very interesting topic, and we can see that our community is very engaged. I want to share here that we, as usual, we give away this codes. We have a discount of 10% again. I want to remind everyone, if I share my screen, Sis Nafisa Khan at the background, if you can help me to put the screen. Yes. So if you can see, we basically have our 33%, one of our next here, this one. We have 33% of Ramadan discount, but this 10% code comes on top of it. So you would want to go to your the account where you put your subscription, and then in their subscriptions you can update this if you have, or if you want to purchase a new subscription, you go to the pricing and you pick one of them. 33% is already applied, but please do it from website, because in the app implementation of these is not easy, so that's why we keep it on the web. Basically, by going the activating or switching the plan, you will see that you can add market. You can add the code there, and so by applying the code market martalk 10, you will get your 10% on top of this 33%. Yes, so that is basically our general announcement. And then we thank everyone for joining our this very interesting episode of discussion about the tariffs, about how things changed and recently about the market, how this is going to affect market in the future, how it affected in the short term and long term. It was very, very interesting discussion, and I really would like to thank Brother Maurice one more time for his participation on this.
Yeah. Thank you for having me, Brother Renat. This was a great discussion, and hopefully we can do more in the future.
Inshallah, absolutely, absolutely. And then if you leave any, just to for our audience, if you leave any comments under this YouTube video, we will be always happy to come back and answer this in the future as well. But this code, by the way, is limited for a few days, so please take advantage, because this will expire. And I would like to thank everyone for joining and listening us in. We will continue doing it every Saturday. We see you here on Saturday at 11:30 EST, Eastern time. But it will be different time for people who are joining from different locations. But we're always happy to see everyone coming and joining and listening us in. Thank you, and have a wonderful rest of the day, Brother Maurice, and for all our audience as well.
Thank you. Bye bye. Assalamu
Thank
alaikum.
you. Bye bye.